Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An interesting pattern or patterns yesterday. It was a bullish harami that could also be seen as an indecisive spinning top, as well as day two and a possible two-day tweezer bottom pattern. All very intricate, I fear. However, it was also further evidence of the resistance of the December 2002 low at 98.55, perhaps more importantly of the coincident lower time, currently 98.44, of the big old broken January to May 2021 bearish Andrews pitchfork. It also is neither a follow-on nor a rejection of the first three sessions of this week being a three-day bearish evening star pattern. To add further to this, the market showed more evidence of the roundophilia of prices having a second consecutive low on the 97.5 number. A little below and probably influencing what is going on is the previously highlighted widespread and somewhat diaphanous congestion zone between 97.22 and 96.20. Smaller zone below that between 95.23 and 95.40. Key elements within this congestion zone are the October 2002 low at 96.85 and the August 2022 low at 96.20. Overall, the market continues to move down within the late June to mid-August bearish shift pitchfork, in between the middle time below, currently at 95.98, and the upper time above, currently 98.96. This pitchfork is an offshoot lower from the earlier big old January to May 2021 bearish Andrews pitchfork. Just above the upper time of this newer offshoot bearish shift pitchfork, we have the closely allied declining short-medium moving average, currently at 99.29. Also the nearby 61.8% absolute Fibonacci line at 99.15 and the February to date downtrend, currently 99.58. So far today, the beginnings of a move lower towards the 97.22 to 96.20 congestion zone. Cable, aka sterling against the US dollar. An indecisive spinning top yesterday, but it could also be seen as a reactionary bullish harami as well. The market was capped again by the upper time, currently 113.23, of the mid-September to early October bearish shift pitchfork. Plus a little above we have the March 2020 low at 114.02 and the October 2016 flash crash low at 114.5, along with the light congestion area from March 2020 between 114.5 and 118 even. Meanwhile below, well, we seemingly do not have much really until the declining middle time, currently at 110.77. That's of the broken May to July bearish shift pitchfork. And that at best is a limited support, if at all. So far today, well, what looks right now like a bearish opening white Mariboso, black Mariboso I should say, bearish opening black Mariboso and bearish engulfing pattern with the market opening slightly higher and immediately moving lower, pushing down through this week's earlier low at 111.73 and towards the middle time. Euro sterling. A long-legged indecisive spinning top yesterday. There was also a key reversal up. This rhymes in sympathy with the previous session's smaller indecisive spinning top. Once again, it seems the market has no problems in breaching the recent overhead cap of the April 2021 high at 87.19, but real problems with trying to close over it. The base of yesterday's action was once again the April 2020 low at 86.69. Looking above, we have some recent congestion from early October between about 87.69 to 87.80 and then nothing until the 50% Fibonacci line of the March 20 to March 2022 move at 88.51. Overall, we continue to remain within the same previously mentioned bullish April to August Andrews pitchfork, in between the lower time below, currently 86.08, and the middle time above, currently 88.76. So far today, well, a significant move higher over the April 2021 high and up towards the recent congestion area between 87.69 and 87.80. US dollar against the Indian rupee. An immediate countering bearish harami yesterday with an new all-time high as well, as the market finally reacts to the moves higher of this week. As I mentioned yesterday, that move back up then was quite a decisive move and changed the dynamics, patterns and their targets from previous commentaries. We now have what looks like a September to date ascending expanding wedge pattern, currently 82.19 to 8400. The market moved up towards the next immediate potential resistance, and that's the 50% projected Fibonacci line at 83.66, but turned back down before it and ended up closing right on the early October high at 82.82. All this activity, yesterday and the day before, has set up the market for a possible weekly key reversal this week. If we have tonight either a close above 82.83 or under 82.33, then we'll be on. Anything in between will have a lesser outside week. Well, right now we are barely looking at an outside week. Now, so far today, right now, a significant move below the 82.82 key 82.82 level, though it really doesn't look that aggressive right now. US dollar against the Brazilian real. An immediate countering bearish opening black Maribosa yesterday, offsetting the previous session's reactionary bullish Harami and bullish opening white Maribosa. The market was capped by the 50% Fibonacci line at 527.37 of the May 2020 to April 2022 move, and proceeded to punch down through the base of the very recent action. And that's the 50% Fibonacci line of the March 2021 to April 2022 move at 522.76, as well as the rising medium moving average, currently 522.08, and the flatlining short medium moving average, currently 520.01. Now, I've said here recently that I suspected the really heavy forces in the recent move back up were the rising medium moving average and the rising lower time, currently 519.28. And this action highlighted that point, as the medium moving average, though breached, saw the market close right on it. And the lower time, well, the lower time held up the market and is the current base of the action. I have pointed out how this previously breached but unbroken as yet late May to late August bullish shift pitchfork. This bullish pitchfork is the current key driver here right now. Two other things to note. I've mentioned before, and probably the last mention of it, how we had a false golden cross, a brass cross if you will, on Friday last week of the medium moving average over the short medium moving average. Just bear that false cross in mind. We also have limited support below the lower time. I suspect it will be near the current intermixing of the slowly declining long moving average, currently at 510.85, and the 38.2% Fibonacci line of the June 2019 to May 2020 move at 510.87. US dollar against the Mexican peso. A bearish Harami, if only just, yesterday, coming after the previous session's second bullish white soldier. Once again, the slowly rising medium moving average, currently 2016.44, capped the rise and turned the market back down, closing on the declining short medium moving average, currently 20.0299. I said yesterday how I thought the previous session's action, and I quote, may not be the end of the recent intraday indecision, but it is a start. End of quote. Well, that statement does not entirely ring true, does it? No. We're back within the indecision zone. Looking below, we still have the broken upper time, currently at 1988.92 of the March to July bearish Andrews pitchfork. This bearish broken Andrews pitchfork is mainly redundant, being overtaken by the bearish shift pitchfork for the same move. Especially the middle time, a little further below, currently at 1983.53. Yeah, I suspect it may still be significant. You see, the reason I've taken pains to highlight these two times these last few weeks is in about a week's time they will cross over. And for those who know me, well, that is when I say look out. Look out for one or more of the following: a change in trend, a reinforcement of an existing trend, and or volatility. These usually lag the crossover by a session or two, but it is worth watching out for what happens on around the 28th of October. You can see the crossover within the red circle on my daily chart. In a bigger picture, the market has been building a base building exercise since mid-August, between roughly 1990 and 2020, with occasional forays outside. This is still the picture, with no significant feature developing in either direction. Or at least that is what I'd normally say. However, I'm starting to look at the action since August as possibly having elements of a rounded bottom, which includes that rising bump from 3 weeks ago, even if altogether it is not such a great looking pattern. Now, so far today, a small dip lower. towards the 20 even round number, but then a pullback up, significantly higher, but not too far from yesterday's close. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.